Hello and welcome everybody to the Pulse here, hosted by the co-founders of PeakBot. I'm Dillon Del Rosso. I'm joined by my co-founder and co-host Ben. Ben, how are you this morning?
Doing much better than I was last week. Thanks for asking. Getting
Yeah,
over
you
a
are.
cold. I'll try to keep the coughs and sniffles to a minimum today.
Yes, please. Yeah, no, you were a mess last week. We don't need to hide it. No, I'm just kidding. Glad to hear you're feeling better. We're excited to give you all the audience here another week of option selling information, everything from exploration to automation. Of course, that's become our tagline here. For those of you who aren't familiar, PeakBot, automated options selling for the retail trader. We've made it easy, we've made it affordable, and we've made it transparent. So we are here to review this week in options selling. I'm going to kick it to Ben here in just a minute, and we're going to go over some charts. We're going to take a look at our watch lists, which we update. Actually, we overhaul them weekly, but they're updated daily for you to select from. And then from there, we highly encourage questions. We are streaming here on Tradier Hub, their YouTube channel, our YouTube channel, and our Twitter. If you have questions, please ask. Don't hesitate. We're here to help, and we love a good conversation. And from there, toward the end of the show, I'll be going into my portfolio live and making some changes on the week. And we'll show you guys how to easily set up your portfolio to have it automated for you and start executing trades on your behalf. So, Ben, did I miss anything? If not, I'll kick it over to you and we can get into it.
I think we're good. I think we are good to go. I'm going to pull up bar chart. You mentioned from exploration to automation. Let's start exploring a little bit at first. How about that? So where do we do our exploring? We get asked that quite a bit, actually. Like, where do we find the stocks that go onto our watch list, and ultimately the options that go onto the watch list? What we do is we really simply just go to barchart.com. We've got a premier membership here. I go ahead, I click on options, I click on most active. Page just refreshed for me. Most active options. And then I take a look at this list right here. And, we apply some filters here. I'll zoom in a little bit.
There you go.
We apply some filters to what we see on this list. And Dylan, I don't know if you noticed this, but Tesla's always on top. Tesla always has more than double the volume than any other stock. We don't automate Tesla. We don't have that running on our wheel strategy. And I'll get to that, get to why in just a minute. But typically what we like to do is we like to filter by options volume or sort by options volume. And we really want to stay pretty high in volume, and high, I guess it's a relative term. You scroll down this list and it's the volume falls pretty quickly. We're pretty comfortable anything over like 20,000, 25,000 in volume, that it has enough liquidity to get, anybody trading with PeakBot or automating with PeakBot in their positions just fine. The second filter that we like to put on is the price. So if we look at this last column here, we like to look at price, and we like to look at stocks that are typically below $100. There will be some exceptions. You'll notice on our watch list, there will be some exceptions. But we typically like to go lower dollar value, because when we're automating strategies such as the wheel, right? The basis of the wheel is you sell cash secured puts, which means that if that contract expires in the money on the day of expiration, we're selling weekly options here. So today you'd be selling a contract that expires on Friday. If on Friday that contract expires in the money, I'm going to have to buy 100 shares per contract. So if I was trading Tesla, for example, and the strike that I sold today was, let's just say for argument's sake, $240, I would then have to buy 100 shares at $240. I would need $24,000 in my account. Now, I don't know what the premium payout is going to be. That's something that we recalculate in our watch list. But that's the reason why we don't go after these high dollar value ones. Like NVIDIA, you need like $47,000. Microsoft, you need like $37,000. So we tend to err towards the lower side here. So in terms of how can you find stocks yourself, like, you could come up with any method. This is what we do. We find this to be pretty effective in terms of being able to filter and sort. You can download this list right here by clicking the download button. It's a really good tool. And then what we do is we move all of this into our watch list. And we made some updates for anybody who is familiar with our watch list. It's going to look a little bit different this week. So I'm just going to highlight some of the key updates that we've made. We've made it a little cleaner, a little more simple to look at. However, if you are looking for all of the data that we did have that is still available, that part's not the cleanest solution, but hey, we're working with what we've got here.
It's there.
It's there. It's there. So first things to point out, we've got some text here that you should read, especially, Rose highlighted in yellow, report earnings soon. We're pretty much clear of earnings season right now. We got a couple stocks reporting earnings, a couple companies reporting earnings this coming week. If you want to download the watch list, you can go ahead and click here to be able to download. Once you do click that, it's going to take you to our raw Google Sheet. You're going to have view only access. You just have to click on file and then the download option. You could download as a CSV file. You could download it as an Excel file. There's a bunch of different file types, but CSV and Excel are probably the most common. So what we do, sorry, I didn't get finished showing up the highlights. So we've edited the watch list here to only pull out the information that's really pertinent to most PeakBot traders, right? We want to know, A, how much cash do we need? B, what's our max loss going to be on that cash? And that max loss is decided by the hedge that's set. And then C, what's the estimated net premium? And then we can recalculate what the estimated return on cash needed is. So in the example of Riot, we're estimating that we're going to sell, looks like the $15 strike, but that equates to $1,500. The max loss is going to be $200. Again, that's based on the spread that's set. And then we've got our net premium of $33 here. So when we take the 33 and we divide it into the $1,500 in cash, we need to have set aside in our account in the case that we do get assigned. That return comes out to 2.2%. Now, if you've been using this watch list for the past few weeks, you're like, where did all of this data go? Where do I see my strikes? Where do I see the deltas? There's a lot of information that's no longer here. Well, here, looking for a more detailed watch list, follow the lines. I was gonna make like a yellow brick road, like follow the yellow brick road, but I don't know how many people would get that.
I'd rather you focus on building the business and the watch list than
so if you scroll to the right, this is, and it will continue to be updated just as normal. I'll zoom out a little bit here to see some more. This is the watch list as you have been seeing it for the past couple of weeks. So you can see you've got your sold put strike, your bought put strike at the 30 delta and the 10 delta. You've got your max loss. You still have cash needed, net premium, and then you have the call side information. So all this information is still here. You just got to scroll to the right. We wanted to make this a little bit more user-friendly for anybody new joining the platform so they can get just the relevant information that they need. Now, as it relates to earnings, we've only got 2 companies on this watch list reporting earnings this week. We've got Oracle and we've got Micron. I believe that's it. But as you can see, there's quite a few that made it onto the list this week. We do filter out any stocks or any companies that aren't estimated to report over at least $10 in net premium because we want it to be worth it, right? We don't want to enter a trade where we're making $3, especially after, if you're paying commissions, you don't want to be making $3 and putting up, $400 or $500, you're risking that as your max loss, right? To make $3. That's just not worth it, in my opinion. And I think that anybody that we talk to would feel the same about that.
Also, I just put it in the chat. Use peakbot.com/watchlists to pull this up, or you can just go to our website, usepeakbot.com, and click on the watch list tab. Either way, just want to make sure everybody knew where to find this.
Cool. Thanks for pointing that out. I forgot to mention that. So what do you do with this information now, right? You could go to bar chart. You can get some information there. You go to our watch list. You get all this information here. You look at this. You look at this list right here, and you're like, okay, well, these seem like pretty nice payouts, right? Like if you do the quick math here, like 1, 2, 3, 4, 5. you need like 10 grand to run these first couple of stocks. And then you'll be making, again, quick math here, a little over $200. So, that's a nice, almost 2% return, basically a 2% return. It seems pretty good, but like, what are some other things that you need to think about? And again, this is something that we get asked a lot. One, we always say you need to be comfortable owning these companies, right? Like if you don't know what Marathon Digital Holdings does or what Sunrun Inc. does, and you're trading them, there's a chance that you get a sign. And then if you're trading one contract, at the end of the week, you might own 100 shares of this company and you have no idea what it does. So, educate yourself on what the company does. Make sure you're comfortable with it and the industry that they're in. That's super important. And then there's a variety of other things that you can do to, make sure that you're comfortable with the trade that you're about to automate. And one of those things that we like to do, again, not financial advice. Actually, can we get that banner going? Not financial advice. Not financial advice, but you can go ahead and pop open your Tradier account. You can go over to the research tab, type in a symbol here, take a look at the chart, and then take a look at a technical analysis tool that they have built in. So this is a really cool tool that I like to use because I don't have to do all the technical analysis myself. But let's start up here at the chart. What I like to do at this chart is I like to look at the 1 month chart, and I like to look for any recognizable patterns. You can see we were trading in a channel, for the last, from 4 to 3 weeks ago. And then the last 2 weeks, it looks like we gapped up here and we are trading in a new channel. And it seems like we're trading somewhere in the middle of this new channel. So in terms of, actual direction, I'm not getting too much from the chart here. By the way, if anybody watching wants us to pull up a particular stock and look at that chart and the technical analysis, pop it in the chat. We will do our best to get that up. I'm sure we'll have time to. So I'm going to go down to this technical analysis tool. It defaults to 15 minutes, at least for my Tradier account, it does. You could go ahead and click more. I like to look at the week analysis. We're trading weekly options here, so I like to look at the week analysis. Looks like it actually didn't change. So we still have a sell signal from the technical analysis here, 12 sell signals, 9 neutral, 5 buy. For me, I think GameStop actually looked pretty good last week. This week, we're getting towards the bottom of this channel. It's a pretty wide channel. I'm going to play it safe. I'm not going to trade GameStop this week. If we look at the watch list, where did they wind up here? They're paying out 1.3%. Yep. So, they're paying a good premium. But again, totally up to you what your risk tolerance is, what you want to trade. But there are plenty of options, right? So let's move over to Carvana. Carvana is one of my favorites. And that's no secret. I say it like every week. And Dillon, I don't know how you feel about this, but Carvana hasn't been on the top of the watch list for quite a long time.
You're right.
And for anybody who's new to PeakBot, we went through a streak from, I don't know, like March, maybe even February of last year, up until like August, where Carvana was just like #1 every single week. It was crazy.
It was trading at $5 at one point, and it ran all the way up to 55. And we were collecting premium the whole time, and the difference between our strike prices, it made my portfolio. I mean, seriously, I mean, that was carried the team on its back. But and just a quick note, I think it was last week I said I'm not going to do it because it ran out of my range between 0.5% and 1.5%. And then I was giving a demo to somebody, and I was on my account and I added it, and it traded for me on Tuesday, and I got in. I got in on Carvana, by mistake, to be totally honest with you. But I'm glad I did. I think it was a good trade last week. So anyway, I'll kick it back to you.
Love that. So Carvana is near the top of the watch list still. Still paying out an awesome premium. Like I look at this and I think, would I risk $350 in max loss? And again, we're risking, we say $350 in a max loss. The way that the wheel is set up, the way that PeakBot trades the wheel, is we open on the 30 delta. So we're not getting assigned, call it 70-ish% of the time. 70-ish% of the time we're winning. And that's just statistically based on where we trade. The hedge, and that's where we would experience our max loss, is at the 10 delta, which just flip that. That means 90% of the time we're not even touching that hedge. So
Right.
would I risk, this max loss, which only happens statistically 10% of the time, to win $64? Absolutely. And then if I don't hit that hedge and I am in the money, then I get to own shares of Carvana. So it seems like a win-win to me. But looking at the chart here, again, we were trading in a channel. We gapped up a little bit. I forget when their earnings were. But now it looks like it started to look like we were declining here up until middle of last week, it seems. And now we've kind of bounced back. So it looks like we are starting to form a bit of a new channel, maybe even start another upward trend here.
Yeah,
so
Ben,
I
they
like
reported on the 2nd. Sorry to interrupt you, but that looks like right when it started jumping up on the 2nd.
Yeah.
Yeah.
Right. Yeah, right there between the 1st and the 4th.
Yep.
When we look at the technical analysis, strong buy on the 15-minute, but again, we want to switch to the week, which there is a buy. There are 12 buy signals, 9 neutral, 5 sell. For me, I'm all in on Carvana. Not literally all in. I diversify, but I'm all in. I'll pull up 2 more, unless anybody else has a stock they want us to look at. I'll look at Riot. Go to the 1-month chart. Strong upward trend on Riot, and again, the wheel is a bullish to neutral strategy. So when we see stocks that are flat or stocks that are going up, those are typically stocks that are more well suited for the wheel strategy.
It's number 1 on the watch list.
This is number 1 on the watch list. Number 1, paying out an estimated 2.2%. Would you risk $200 to win 33 when that $200 is 90% likely not going to happen? Yes. Not financial advice. Me personally, that's what I say. So Riot, we look at the technical analysis here. Look at the week. We've got a strong buy on Riot. We've got 16 buy signals, 9 neutral, only 1 sell. We've got a strong upward trend on the charts. I'm all in on Riot too. Can you be all in on 2 stocks? I think so.
No. But
moving on to Sunrun. Sorry, did you have a comment on Riot?
No, actually not. But I'll kill time.
I was hoping you did, so I could take a sip of my tea. All right, so we're going to go to the 1-month chart on Sunrun. If you look at that chart we just had up, this is the year chart. Looks like a big downward trend over the course of the year. So that is something to keep in mind, right? What does the greater trend look like? But if we're looking to just trade this for a week or so, we were trading, it looks like a channel here and here, and then an upward trend. It looks like that's reversed. It does look like we are at a line of support right here. Things could get pretty hairy if that support is broken. And if we break below, it looks like if I were drawing lines on charts here, I'd draw a line right at like 1250. And if I saw Sunrun drop below 1250, personally, I'd get out. If support doesn't hold there, because it looks like the next support line, which was a resistance line, would be around $12. And $12, a 50-cent drop, that's a fairly decent drop. That's enough to potentially put us in the money when we're trading the wheel and trigger an assignment. So again, up to you what you want to do, but that's my analysis from just looking at the chart. I'm going to look at the technical analysis here. 12 sell signals, 10 neutral, 4 buy. Could go either way. The way that the wheel is set up, there is some cushion built in for some price drop. But again, we want to be targeting stocks ideally that are in an upward trend, and there's plenty of options to choose from, right? So no reason to roll the dice when you can just go to this watch list, pull up a few of these, and you could analyze these a lot faster than I'm analyzing them. You could literally just plug them in and then look at what that technical analysis thing says just to get an idea. We've got a suggestion that we look at ticker SE.
Yep.
I'm going to pull that up. SE, looking at the 1 month, I'm guessing this was earnings right here, and that's not an earnings that you want to be a part of. This big gap down on the 13th, 14th. Since then, that has formed a resistance line right around $40, and that's right where we're trading right now. So the range looks from $40 to about $36. I'm not sure where we're estimating SE is going to get the strike at, or the strike price. So it looks like 38.50 would be the strike price that we're estimating for today. That puts us like right around here in this range. Does look like since December we're trending upwards, but we are at this point of resistance. Now, if we break through that resistance, that's a bullish indicator. That would be a good sign if you're trading the wheel and we break above $40. So, you know, I'd say this is one to monitor. But we look at what happened last time we approached this $40 level. We bounced off it pretty hard and declined. So, based on the chart, you know, again, this is probably one that I would personally wait a week on just to see what the price action looks like. See if we break above that $40 mark, that $40 resistance point. And then if we look over at the technical analysis here, looking at the week, that shifts back to a sell. So yeah, for me, again, I would probably just wait a week, watch it. I'm not particularly tied to this. You know, if you like trading C, then by all means, I mean, the chart wasn't too bad. You could, you know, we could break it above that $40 level, and you know, nothing to worry about after that. So at this point, Dillon, I'm going to hand it over to you. And if anybody else has any stocks they want us to pull up, if we've got time at the end, we certainly can do so. But Dillon, show the people how they can do this hands-free.
Awesome. Let's do it. So on my screen here, this is the PeakBot app. Okay, so it's a web-based app. You can visit this at app.usepeakbot.com. All right, so also very mobile friendly for those of you who have iPhones and Androids. If you're walking around without an iPhone or an Android, I don't want you using PeakBot. No, I'm just kidding. But
you didn't mean that.
I didn't mean that. But get a smartphone. So you can use this on your mobile or your desktop. So we know it's very dark, very black heavy here. We are updating I know we've been saying that for a little while now, but we will be updating our layout here very soon. So what I'm going to go over is, this is my live portfolio. Okay. We're stringing together a good, 5 or 6 weeks here with making about 1% a week. So loving that. For everybody who knows me on this show, when I trade the wheel, which is the only strategy I'm trading this account all year, okay, and I'm up about 31% on the year. So I'm pumped about that. I never made that much in the market before, but I was a loser prior to this trying to trade manually. So I like to stick between 0.5% and 1.5% in premium paid. So if we're looking at our watch list, I have the detailed version up just so we can look at the strike prices and everything else. But anything that falls below 0.5% paid in premium, there's great stocks, and you can say they're safer because they're less volatile. But it's hard for me to ignore these stocks that are in that 0.5% to 1.5% range. I might be breaking one of my rules this week, but we'll take a look and we'll break it down. So with Lyft, all right, so Lyft is, I believe, still trading within our range. So if we take a look at Lyft here, we are trading at $13.21. Strike price is $12.50. Our bought strike is $11.50. So the most I'm risking there is $100 because that's the distance between our strike prices. So it's only going to take me $12.50 to make $13 this week, which is a 1.04% return. So I'm going to keep it here. Now we're going to take a look at PLTR. I think this is where I'm breaking my rule. So if we take a look at PLTR on the charts here, let's take a look at things. So Palantir is trading at 1777. Our strike prices are 17 and 16. So I'm only risking $100 here. I'm putting up $1,700 for the $13 return. It's a 0.76% return. That's in my range, but I couldn't stick to it this week. I had a good trade on Palantir the last few weeks. I'm emotionally not feeling it. So I'm actually going to be replacing Palantir with Marathon Digital Holdings. That's paying a 1.74% premium, but for about the same amount of capital, actually less. Instead of making $13, I'm making 27. So I'm going to come back to the PeakBot app here. What I'm actually going to do is I'm going to remove Palantir. So you can actually do this a number of ways, but you can check off the box. You can click Edit Status, and I'm going to remove that stock. So Palantir is now gone. So the next thing I'm going to do is I'm going to click on the big green plus sign here to get started. So 3 steps. Select my bot. I'm going to go with the wheel. Select my stocks. So I'm going to search Marathon here. You can type out the whole name of the business. If you do that with Marathon, be careful. Or you can just type out the ticker. And finally, step 3, enter your budget. How many spreads, or if I was running this unhedged, how many contracts would I want to sell here? So I'm going to put 1. And advanced settings, again, this is just if you wanted to turn off the hedge. Not financial advice, but I won't be doing it. And I'm ready to go. So I'm going to hit activate. I'm going to confirm, and now Marathon is added into my automated portfolio, active for 1 contract, and it's hedged.
Hey,
So,
hey, Dillon, real quick. I think it's important because we've got quite an audience today across all platforms. For anybody who's wondering what that hedge does, that's what provides that max loss. Maybe Dillon, you want to pull up where you see that hedge in PeakBot.
Sure.
That max loss doesn't exist if there isn't a hedge in place. If there isn't a hedge in place, then your max loss is essentially the estimated cash needed, if I'm not mistaken.
Well, right. You can. I mean, if the stock goes to 0, right?
The stock can just keep going down.
Right.
The hedge, what it does is it says if the stock goes down a substantial amount, if there's an outsized movement in the stock price downward, we've basically bought you insurance, right?
Yep.
Think of it as an insurance policy. If you don't have that insurance, your account could just keep going down. That's why Dillon and I always trade hedged. We know some people out there that love to live life on the edge and they don't want to trade hedged. So they'll throw out it's called naked puts. They'll throw out their naked puts into the market. And the reason for doing that would be, when we set up these hedges, when we set up this insurance policy, we are paying some of that premium back. If you don't want to pay all that premium back, then you would trade unhedged. But
yeah, and here's the unhedged. So at the top of our watch list, we have the wheel and we have the wheel unhedged. So the upside, really the only upside of trading it unhedged, is collecting premium faster. So if we look at Marathon here, notice there's only 1 strike price. We're selling the 25 delta as opposed to the 30 delta. So what's happening is if we fall below 1550, we're saying regardless of what that stock finishes at the end of the week, we'll take the shares. Now we're going to own them at 1550, but let's say it dropped all the way to 10. Now we have a $550 unrealized loss in our account, right? Stocks trading at 10, we own them at 1550. That's $5.50 in the hole per share times 100 shares. So yes, you're gaining a faster premium here. You're making $36 on it, as opposed to if we come and look at this version of it. My internet's a little slow, apologies. But here's it again. What we're doing now is we're saying, hey, the second it drops below $14, we don't want the shares. Okay, that's saying we're comfortable taking them between 1550 and 14. But if it drops below 14, we're not taking the shares. I've been saying this on demos, Ben, for any blackjack players, okay, any gamblers. When the dealer shows an ace and they say, would you like to buy insurance? Quite literally. Now, Ben, I hate blackjack. And when they ask for insurance, I never do it. Stupid. Okay. The book says to take the insurance, right? Because God forbid they turn over a face card, no matter how good your hand is, the best you're going to do is push.
Yep.
The best you're going to do. So you pay back a little bit of your bet to be protected. It's the same thing here. You're receiving a premium by selling the strike price, but you're paying a little bit of that back for protection on the downside and leverage on the upside. So that's what it's there for.
I think the moral of the story is don't be greedy.
Yeah, play some defense for yourself, right?
Hey, it's a long game that we're playing here, right? If you want to get rich quick, you're not in the right spot.
There were times before, I don't know, call it 10 years ago, 20 years, who knows? There were times when the market wasn't as volatile, and you might be able to say the market was a bit more predictable. I think we're in a pretty unpredictable market, right? Nobody really knows what direction we're heading. And if they do, they're not telling us.
So we did get another question. Jerry popped in a question. The question is, so if you play with the hedge, is the cash required still accurate?
Great question.
The answer is yes, because if you get assigned shares, you will still need the same amount of cash. Now, when you set up this trade, if you're doing it manually and you look at what your broker is telling you, it's actually that max loss. That's going to be the total effect on your account. So you could theoretically trade, in this case, Dillon's got marathon highlighted. You could trade 10 marathons inside of the estimated cash needed, with $1,500. Now, but that would just mean if you did get assigned, you would need, that 1,550 times 10 in order to actually buy the shares. So the amount of margin required or margin impact to your brokerage account will not match with what the estimated cash needed is here. Now, we do have another strategy that's going to be coming out in the new year. And that one is just based on these vertical credit spreads. So that max loss will be all that you need to trade with. There won't be any assignments.
Right.
Yeah, because you'll never own shares with that strategy. So that is to come. But to answer the question directly, yes, the estimated cash needed is correct because you would still need that much in the case of assignment.
Yep. You don't want to abuse your margin. You don't want to enter into a maintenance call. So yeah, have the cash to back it up, right? So, but know that this is really all you're risking. You need the cash, but this is really all you're risking here when you hedge it. So let's get back to the portfolio. Looking at my notes here. So we kept Lyft. We got rid of Palantir. I added Marathon. TQs, without going back and forth to the watch list, TQs is going to stay. It's paying 0.72% this week, and it's going to take $4,300 of capital. I'm going to keep that there. Same thing with Unity software down here. That's paying 1.11% in premium, and that's going to take about $3,100 of capital. I think our faces are slightly in the way. There we go. Those are staying. The only other change I'm going to make is I'm going to get rid of TTD here. So TTD is Trade Desk. So if I look that up on here, let me zoom out a little bit. Apologies. So Trade Desk, trading is $70. Our strike prices are 68 and 66. My max loss is $200. It's going to take $6,800 to set aside, and I'm only making 25 bucks on that. That's only a 0.37% return. So Trade Desk has fallen quite significantly from last week. I'm going to get rid of it, and I'm going to be replacing it with Wayfair. I've traded Wayfair a ton. I've traded Wayfair a ton on the wheel this year. So here it is. Trading at $55. My strike prices are a little bit more spread out. I have a $400 max loss on this because my strikes are 48 and 52. But for 5,200 bucks, it's paying me $61 in premium, which is a 1.17% return. I like it. So this time I'm going to click the little settings icon here on the right-hand side. I'm going to remove TTD. And now I'm going to add way fair. Step 1, select my bot. Step 2, select my stock. Step 3, set my budget. I'm going to enter one spread here. And this number gives you an estimated number of how much capital you need to enter that contract. It's not always exact. We build in a little bit of a buffer there just in case the stock moves on you. And I'm going to hit activate. And we're ready to rock. So I have just shy of $15,000, again, estimated for my wheel portfolio this week. These contracts are going to enter for me between 11 o'clock and 1 o'clock Eastern today. That's our trading window. We like to let the first 90 minutes of the market pass us. It's chaos. That's where a lot of the action happens. We like things to settle in a little bit more. So that's my portfolio for the week. So 2 changes, 3 that stayed, and I'm excited for another week of the wheel. So Ben, what did I miss? If anything, if not, I think we're good to go. We went a little long here, so we want to give people enough time to maybe set up their portfolio before the week starts.
Market opens in 24, 23 minutes, and you have until 10:55 to get your trades set up in PeakBot. So if you don't currently have a PeakBot account, you can go to app.usepeakbot.com and set up your account. You get a 2-week free trial, no credit card needed for that trial. Integrate with your Tradier account. We're also integrated with TD Ameritrade, soon to be integrated with Schwab. But our preferred brokerage is Tradier. Go ahead and get integrated, get automating today. If you have questions on our website, on our web app, there's a little chat icon. You can ask questions in there. You'll get myself, you'll get Dillon, you'll get other members of our team to answer questions for you. And then additionally, there are certain times throughout the week where Dillon will be giving demos. You can go and sign up for one of those demos. Seats are limited in those demo sessions. So if you want to go to one of those demos and Dillon, I forget what the link is for that. Maybe you could just pop that into YouTube, or we can include it later.
Yeah.
And then, you could pop in there. You could ask questions specific about your account, about the platform. It's more of an interactive session versus this where we're just kind of talking at you, although we want this to be interactive, right?
Yep.
And speaking of interaction, we do have another question.
So Ben, I'm going to pop off. I got to run here, got to run an errand. I'm going to let you take this, and just remember to say, see you at the peak at the end. Okay. So I'm going to answer Jerry's question. I appreciate you guys, and I'll be seeing you next week.
Sounds good. All right. See you, Dillon. So question here. So talking about the hedge that sold on Friday. So great point, and thank you for bringing this up, Jerry. So on the wheel strategy, what we're doing to start is we're selling put credit spreads. Now, if you get assigned on that put credit spread, you will then own the shares, and then we'll flip around and we'll start selling call credit spreads on your behalf. And those call credit spreads are set up at the 50 delta. We're selling the 50 delta and we're buying the 20 delta. So we're buying the 20 delta so that way we could still participate in upside. Meaning, and in the case of SE as an example, I'll pull back up in my chart here in just 1 second. Okay, that should be popping up in just a second here. So in the case of SE, for example, where we're looking at this chart, we're hitting a $40 resistance level. If you currently own shares of SE, let's say you own 100 shares, right, and you're running one contract on the wheel that PeakBot trading for you, what's going to happen today is we're going to sell, again, the 50 delta. We're going to buy the 20 delta. So if SE continues to increase in price, that bought call is going to increase in value. And if we take a look at the detailed watch list, which I will switch to, we can see what price we think we're going to, or what strike we're going to sell, or we're going to buy that call at. So $43. So, if at expiration, SE is above, the price is above $43, or even on the way there, it's showing some strong movement to $43. That the value of that bought call contract is going to increase, and we're actually going to be able to see some gains on that, in addition to the premium that was received when we sold the 50 delta. And then what we do, and to Jerry's point here, what the bot will do for you actually is on Friday mornings around 10 a.m., we're actually going to sell out of that bought position for you. Because if you wait till the end of the day, the value is going to decay and you're going to get less for it. Now, is there a chance the price keeps increasing throughout the day? Sure. But you can never predict price movement like that. So what we do is we get you out of that position. We actually get you back some of your premium, right? Even if it's not a winning call, we're going to get you back some premium regardless. So whatever you're estimated at the beginning of the week in terms of premium, if you're on the call side, you will be getting more at the end of the week when we close out of that position for you. And it's also a great opportunity to win even more. I know it happened to me on a couple of positions. I think it was Upstart and even GameStop. I think Riot happened a couple of weeks ago as well, where on Friday, I was able to exit my bought call position, or the bot exited that bought call position for me. And I actually made more money on that call trade than I did in premiums that I received. So that's just another bonus. If you're trading the wheel and you own the shares, you're earning more premium because we're trading the 50 delta, and then you got the opportunity to earn a lot more in the case that the stock price keeps going up in that bought call that you now own. So thanks for bringing that up, Jerry. That's a great point and a great great bonus for automating those trades. Friday morning, might not be looking at your positions, might not be worried about it. PeakBot's got your back. PeakBot's doing all the work for you. PeakBot will get you out of that position, get more money into your pocket. So with all that said, unless there's another question that pops up in the next 15 seconds while I'm closing this out here, go ahead. The market opens in 20 minutes or so, a little less. Get your account created. If you don't have one, get your bot set up. Dillon showed us how to do that. If you have questions, we will be here to answer those questions. But until then, we'll see you next week. And more importantly, we will see you at the peak.